Welcome, ladies and gentlemen, man. I hope you guys are having a great evening. I'm up. The market is up. The charts are going up. Everything is pumping right now. CPI came in. We looking at a 99% interest rate cut by next week. But that's not all. That is not all. Let's get into the news.
Hey, ladies and gentlemen, we must admit that crypto's time has come. For too long, the SEC has weaponized its investigatory subpoena and enforcement authorities to subvert the crypto industry. That approach was not only ineffective, but injurious. It drove jobs, innovation, and capital overseas. American entrepreneurs bore the brunt and have been forced to spend fortunes on building a legal defense instead of a business. And today, ladies and
So,
gentlemen,
family, it's about that time. So, as you see here, dog, the big bet. Now, again, I'm not promoting no other meme coin. I'm not just talking about a meme coin, but I'm just bringing this to light to everybody that is watching me right now, right? As you see, bar chart reports at C2 blockchain makes bold move into the future of Bitcoin memes, accumulating 477 million dog tokens, not Dogecoin, in a high stakes bet that could pay off big. Family, they bought 477 million tokens of dog. Most of you that is watching me right now owns tons of millions of Dogelon Mars. You do not understand how early you are in this space. We're so early, it's unbelievable. And this with this token that I greatly invested into, Dogelon Mars, will be the game changer for everybody lives. As you see here, this penny stock is betting big on a dog meme coin. That's not Dogecoin. Should you buy it here? You see this. Of course, we know Bitcoin is a granddaddy. We know Bitcoin is going to go ballistic. We know that Dogelon Mars was built on the ERC20 blockchain. We know Dogelon Mars has their own blockchain. Please emphasize that right there. We have our own blockchain. I know this may go over a lot of people's heads, but with us having our own blockchain, I'll explain later down in the video. Hey, stay locked in. Kyle Samani, he says the Solana blockchain can process 14 billion transactions per day. And that's enough to settle all of global security markets. Let's hear him talk.
I picked Solana 8 years ago. Multicoin as a firm is very famous for having invested in the Solana seed round all the way back in early 2018. We have continually increased our investment in Solana over that time. I've written about Solana on our website extensively. And we made the investment all the way back, dating 7 or 8 years ago, because we understood the vision for internet capital markets to trade every asset in the world on one global unified ledger. And we saw the opportunity for Solana's technology strategy to be the one that would get there. And, you know, the Solana blockchain today is 5.5 years old, and it has now proven that it is the most performant blockchain in the world that can handle settling global securities markets. For some context on that, the Solana blockchain can process 14 billion transactions per day, and that's enough to settle all global securities markets, not just NYSE, not just NASDAQ. You could take LSE, you could take Singapore, Hong Kong, Australia, every securities market around the world, and you could settle them on Solana at its current capacity today. I picked Solana.
You heard them. And what other blockchain that we are on? Solana. Oh man, it's just getting juicy, man. Y'all better stay locked in. And when I was telling you guys that $10 Dogelon Mars is reasonable, it's possible, I mean it. Again, we're sitting at, let's just go to CoinMarketCap right quick. Let's see how we looking. So right now, the fear and greed index, we're sitting at neutral, 50. Altcoin season, right now we're sitting at 65. Average crypto RSI is sitting at 59. And as you see, the whole global market cap for crypto is at $4.02 trillion. Again, Bitcoin market cap is sitting at $2 trillion. There's $400 trillion sitting on the sidelines. There's $100 trillion that is going to be injected into the blockchain. Look at Dogelon Mars. It's sitting at 1,030-fold. 6 zeros. 6 zeros. A lot of people are scared. A lot of people are selling their bags. They're selling their positions. They're selling their positions to get into different assets. Again, I warn you guys. This isn't the time to be scared. This isn't the time to panic. This is the time where you are thinking, what should you do next? Did you get your trust funds in order? Did you get all your, like, are you handling your bills? Because damn it, credit scores are not going to be valuable anymore. For those who want to sell their assets once they become multimillionaires and billionaires and say, hey, I don't need this coin anymore. Let me go ahead and just sell it all. And I'm going to sit on all this cash. The cash don't mean nothing. It doesn't mean nothing once they cut that damn credit score out. Once they cut everything else out, think about it. Rest in peace to the people in the Twin Towers. But I mean, how do we still have credit after what, $2.3 trillion was destroyed? Make it make sense. Make it make sense. And as you see here, tokenized stocks, the $100 trillion on-chain.
For example, I think of the permissionless implementation. These assets are freely tradable on secondary markets. But the problems with the X-Stocks model is that they really rely on these on-chain inventory pools, these DEX pools to trade in and out of. And the liquidity and pricing available in those pools is pretty terrible, quite frankly. So a lot of people have bought, let's say, Tesla X at the wrong price. It's not the price of the underlying. And you can't just exit it in size because the slippage you would get on an order like that is incredibly meaningful. So a lot of people, I think, were very excited about the prospect of these permissionless stocks, but the implementation was such that the pricing of it was unreliable and you can't trade in and out in size. So on the global markets does represent the first one where both are present, and that is the true innovation that we launched last week.
I want to explore both of those because both of them are just unique problems in and of themselves. One being the permissionlessness, and then second being the liquidity. I think the liquidity thing is smaller of the two, so let's start there. And then I have a bunch of questions about the permissionless stuff after that. Isn't that just a problem, though, of a nascent market? As in TradFi, there are market makers. There are that's where all the bids and asks are. And on day one or week one or year one of on-chain tokenized securities, wouldn't you expect that to just be a very illiquid environment that would become more liquid as more buyers come online, more supply comes online, and market makers all kind of come online? Or also the question is that, and then also, how are you guys bringing liquidity? What's that mechanism like?
I mean, I think it's true that the market is nascent and can and may become more liquid over time, but there are still very fundamental differences between the model we're pioneering with global markets and the X stocks model that lead to very different outcomes in terms of how costly creating that liquidity is. So X stocks is, I mean, it is effectively a rebrand of Bakkt Finance, in partnership with Kraken, and Bakkt has been around for a couple of years with, this same model of relying on largely pre-funded liquidity venues in order for, investors in the secondary market to get access. And, this is really how most of crypto has traded to date, where like trading and settlement are one and the same, and pre-funding is required. And, we put all these assets somewhat passively in liquidity pools and, wait for investors to come around. That really is not scalable to hundreds of different securities or thousands of different securities. I mean, you can't have market makers holding inventory and enormous supply, like on every chain, waiting around for buyers and sellers to come around. And that's not how trading and settlement work in TradFi, right? I mean, there is sort of good reason for, trades to be agreed upon, which, at all sorts of different venues, at different broker dealers, and then for settlement to happen, after the fact, only once the trade is agreed upon. Now that's like a pretty long lag in TradFi. We're able to make it, seconds, and even a fraction of a second instead of, days. But by supporting this kind of instant mint redeem where the trade is agreed and then, a fraction of a second later we settle, we are able to port like the full TradFi liquidity on chain more or less without needing market makers to be holding all this inventory. So only when a user comes to us or comes to some secondary market platform, and tries to buy a security, only then do we mint the token and buy the underlying stock to back the token.
I see. Okay. And so when it comes to actually like
we'll get to the rest later, man. We'll get to the rest later. We ain't done yet. This is why I'm playing these videos, to put light and shed light to you guys that there is $100 trillion that's going to be on chain. That's just the first wave. The first wave. We're not even talking about trillions and trillions that's coming behind this. People are still underestimating Ethereum. They don't know America is coming on chain and it's using Ethereum as its ledger. I demonstrated that Ethereum is leading in the real world asset market share, but let's add another dimension. Let's talk growth. In the coming decades, I believe Ethereum could become the root of a trust for $100 trillion in American capital markets. America on chain. People think America becoming the crypto capital of the world is just a meme. I understand if you thought that. Most narratives don't have substance, especially from politicians. I was also skeptical, but this one is proving true. Look at the actions. Genius bill signed, tokenized dollars, treasuries. SEC's Project Crypto equal tokenized stocks. Every fintech and Wall Street equals all in on crypto. This is just the start. In short, tokenization has been mostly illegal in the US through 2024. So when you guys are talking about the old cycles, the past cycles, that does not matter in this new day of age. This crypto is here to stay, and we are going to become wealthy, generational wealth. But not only has it become legal in 2025, it's now being pushed by the US government in an effort to modernize US markets. Wall Street and fintechs are incented to make this happen. American capital markets are coming on chain. Nothing stops this train. So how much capital will America tokenize? Let's see. US percentage of global market share. Stocks, 49%, which is $62 trillion. Bonds, 40%, that's $58 trillion. Again, we already surpassed 100 trillion. Corporate bonds, that's 34%, that's 11 trillion. Government bonds, 51%, that's 29 trillion. ETFs, 70%, that's 12 trillion. Money markets, 61%, that is $7 trillion. Total is $120 trillion, non-overlapping amount. When I say there's tons of trillions that's going to flow behind this, this is just the first phase. We're not calculating China. We're not calculating Russia. We're not calculating the whole Europe, the whole Africa, the whole countries all around the globe. So I welcome you. And I also congratulate you for stepping into this space where the boundaries in this space are very crucial when you are a crypto pioneer. We've dealt with the bear traps. We've dealt with the bull traps. We had high hopes and then we had sorrows. It's a whole new ball game. It's a whole new ball game that you all have entered into. So if you are a new viewer, I salute. But right now, I can't say that you are early right now. I can't say that. Right now, I can't. If you're just not hopping in, I don't chase green candles, but best of luck. Dogelon Mars is still cheap at a great price. Bitcoin is still cheap at a great price. Again, this is not financial advice, but just make it make sense. The US will tokenize its $120 trillion in a multi-decade transformation. As the US leads, all global capital markets will follow, as what I said earlier. The US dollar is the world reserve currency. US treasuries are the world reserve asset. Ethereum will become the root ledger for American capital markets and the world. The market isn't pricing this in. Ethereum equals world ledger. ETH equals world reserve asset. And as you see here, stocks, tokenized stocks league table. And as you see, the runner-up, Algorand and Ethereum. Come on, baby. And what do we see here? Gold, top entities. Number one catalyst, Ethereum. Treasuries, top entities, Ethereum. And then stable coins, Ethereum. Come on, man. You guys are hopping into this space. Now, Mike Novogratz, he's definitely bullish. I'm just going to play this clip, man. Like, all the facts is here.
Thanks for joining us, and thank you for joining us on this week of our 30th anniversary. We've been talking at least now, I think, with you about Bitcoin for at least a decade, if not longer. And I'm curious where you think this is all headed at this point in the ball game. We had Tom Lee on the broadcast earlier this week, and he said he thought there was a chance that Bitcoin could break out and get to $200,000 by the end of this year. Realistic? Unrealistic?
His lips to God's ears. Listen, Bitcoin's at a consolidation right now, partly because you're seeing a lot of these treasury companies in other coins take their shot, right? So Tom Lee's company, the Ethereum company, have come. We closed just yesterday $1.65 billion in Forward Industries, a Solana ecosystem company, which I'd love to talk about in a second. That's bringing energy into the crypto space. It's bringing money into the crypto space. And Bitcoin is kind of going sideways a little bit, I think, while these other ecosystems are having their moment. I think probably we have another big surge up towards the end of the year in Bitcoin as the Fed starts the cutting cycle. And this kind of crypto idea just keeps gaining momentum. It's interesting. The SEC chair about 2 weeks ago, Paul Atkins, said he wants all markets to move on chain. And that is such a radical departure from where we were. And it's a radical statement. And that wasn't a one-off speech, right? We continue every couple days, there's another comment that's pushing things in the right direction. You saw NASDAQ's announcement yesterday. I've been saying for, years, this blockchain revolution really had just been Bitcoin as a store of value and then stable coins as cross-border payments. And what had held us back was blockchains being fast enough, safe enough, secure enough, and trusted enough, and more importantly, a regulatory framework that allowed people to experiment. And so now we have both.
So here's the question. You said you think that there's this consolidation phase in part because money that might have been either otherwise pushing the price of Bitcoin higher is, you tell me, is it coming out of Bitcoin into stable coins and other coins? Or is it just not moving into Bitcoin at the same pace because there are these other options? And if all of that is true, therefore, how do you think about the ultimate market?
Listen, I think crypto market is $4.5 trillion, right? Global wealth market is $400 trillion. And so we got a long way to go, right? We're just getting started. Think about this company Ford that we just, Forward Industries, a ticker Ford that we're launching, right? That's $1.65 billion that came in. That's new money, dollars into the crypto space, right? This is a Solana. Why Solana at this moment? Total transactions per second Solana can do in a day is 14 billion. That's more than total transactions on equities, fixed income, commodities, and foreign exchange, right? And so you've got a blockchain that's now fast enough, tailor-made to be the blockchain for financial markets. And you got an SEC chair saying, I want you to build on chain. And so those two things are lining up. I'm calling this the season of Sol. But right behind us, you've got Dan Moorhead, who's coming with a Sol fund, a Sol treasury company, and then you've got two ETFs coming right after that. And so that money pouring into Solana ecosystem right now because people see that as a potential winner in the financial market space, the blockchain. But
if Solana wins, this is the thing that I'm trying to figure out, and this is maybe why I was asking the question. And maybe you could say they all have different purposes, but at some level, maybe they don't. So if you think about Solana, if Solana wins, does Ethereum not? If Ethereum wins, does Solana not? Do you put Bitcoin in a completely different category? And then meantime, you have all these different trust companies and others that are levering themselves up in certain ways. Sometimes there are these sort of levered ETFs. And how we should think about that, which is at some level a speculation on top of all of this.
Yeah, listen, so I think Bitcoin as a store of value stands by itself. It's digital gold. It's going to be digital gold. It's got a community of people that trust Think about what blockchains are, or cryptos are. They're communities of people that decided to trust their hard-earned wealth in this technology, in this community, because they don't trust, because we have a breakdown in trust in the government, in between political parties, between countries, right? Trust is in a bear market and an accelerating one. And so I think Bitcoin is going nowhere but up over time. Ethereum has its own community and its own narrative and its own use case. Yes, it will compete against Solana and other blockchains, but it's not like we're going to have one blockchain to rule them all. And so this is healthy competition to kind of rebuild the financial architecture that the whole world runs on. I saw you had Mike Cagney on earlier on, right? He's got a blockchain that he's doing his stuff on. What might turn out is maybe Mike's product ends up trading on his blockchain, or maybe it ends up trading on the Solana blockchain, right? And so you're going to see a consolidation of change. You're going to see bridges between them. But most importantly for the space, money is going to move into the space as we now start moving from narrative to plumbing.
Oh, you heard him. It's coming. It's coming. In crypto, conviction is the ultimate edge. Have you been convicted this whole time since you've been holding these digital assets? Have you been convicted of holding Dogelon Mars when even the whole world was against you? Sergey Najar projects RWAs will surpass the entire crypto market. Let's hear what he has to say, babe.
Personally, I believe that the real world asset trend and the real world asset category will relatively soon in the next few years overcome the total value of cryptocurrencies. And then our industry, by definition, by the numbers, will not be about cryptocurrencies. It'll be about blockchain technology enabling things like real world assets. And that's what the blockchain industry will be.
Crazy. 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 So as you see here, Ben Grossman, he says 100 trillion in the market, baby. 100 trillion in the market. JP Morgan says institutional adoption for crypto is still in early phases. See, we're still in early phases, is what they say. Really? History is repeating itself. Gordon, history is not repeating itself. History is now being renewed. We are going to witness the greatest global transfer of wealth in history. So if you thought what happened in 2017 with the 356x that happened, oh boy, get ready for this $1,000,000x. On-chain capital markets represent a $1 trillion opportunity. 5 years from now, when people open their first investment account, it will be on blockchain rails, and they'll be able to hold equities, crypto, and transact 24/7. Say goodbye to Wall Street.
If we were to project this forward to 2030, what do you think capital markets, what do you think TradFi looks like? What do you think Wall Street looks like? How much in value do we have in tokenized assets just in general? I mean, we're still under $1 trillion, right? We're $250 billion right now. How big does this get? How fast does it happen? And what does the future look like?
That's a tricky answer, tricky question to answer, because I think what we've seen so far is the adoption of this space really works with the hockey stick, right? So it's almost like you're doing a lot of prep, and for a while nothing really happens, and there's a little bit of adoption, but then all of a sudden the right components are in place. I think with stablecoin that ended up being the DeFi ecosystem that formed, and all of a sudden there was just this hockey stick growth of the asset, so that it now is 280 billion and continuing to grow, because more and more people's minds, the stablecoin is a good way to get access to the US dollar. And I'm sure over time we'll see the same thing with US treasuries US stocks and US ETFs. So it's going to be very interesting to see. I'm not sure I have a number for you, but I do feel pretty confident that, 5 years from now, 2030, a lot of people who open up an investment account for the first time, it will be on-chain rails, on blockchain rails, and they'll be able to hold equities, crypto, really whatever asset class that it is they want to hold, and be able to transact in it 24/7.
If we're to project,
isn't that scary? Have you guys been seeing Marco doing his journey until 2030? 2030 is going to be so effing unbelievable. The astronomical prices that people said I was pointing out, $10 is reasonable. But the astronomical prices that I have been calling out for a couple of years, 7,500, 10,000. CryptoBrown, what you smoking, right? A total of $445 billion has been added to this to the U.S. stock market today. Massive pump in incoming crypto is coming. Why the biggest alt season could start soon? Everybody pay attention. Alt season is not random. It usually starts when Bitcoin dominance peaks and begins to fall. But the usual Bitcoin dominance chart is less reliable now because stablecoins make up a much larger share of total crypto market cap. The better signal is Bitcoin plus stablecoin dominance. Every cycle, this combined dominance has hit a ceiling and then rejected. 2019 rejection equal alts rallied strongly. 2020 rejection, start off DeFi summer. 2021 rejection, massive alt season. We hit the same ceiling in 2025 and another rejection happened. Historically, this is the signal that precedes alt season. So why haven't alts moved yet? Liquidity is still building. I've just showed you all those videos in this video right here of why the liquidity is still building, and there's shit tons of liquidity that is not even in the space, that's held on the side, because this is not a buyer's market no more. This is not a buyer's market anymore. Retail investors are not allowed to participate once the great mammoths come in. Rate cuts and QE have not arrived yet. Risk on capital is waiting. Once liquidity expands, alts will outperform. Retail demand missing. Search interest and social engagement are well below 2021 peaks. Retail speculation is the fuel for alt rallies, and it's not there yet. No trending narrative. In 2021, DeFi, NFTs, and the metaverse drove the mania. In 2025, we saw several small narratives, but no single sector has dominated yet. Once that focus arrives, capital will rotate quickly. And the conclusion, if Bitcoin plus stablecoin dominance continues to go down as it did in past cycles, it will set the stage for the next large-scale alt season. Alts historically deliver their biggest gains once Bitcoin tops out and rotates capital into the broader market. And this time, it will happen with deeper institutional participation. This is what I mean by the mammoths. Those mammoths that's sitting on the sidelines with shit tons of liquidity. Again, this is not a buyer's market. Retail investors are not allowed. This is why we are early crypto pioneers. Once they swoop in, it's game over. ETF approvals for major alts, broader use cases, narratives, AI, RWAs, ETH staking. The scale of Altseason will be far larger than the previous ones. The scale of Altseason will be far larger than the previous ones. I hope you guys are paying attention. As you see here, we need a fourth industrial revolution, cough, cough, crypto, to come along and grow faster than our inflation. Otherwise, we are going to enter a debt spiral that is not recoverable from. Let's play this clip.
Has happened, Paul, is we've had the corporations, the banks, the real estate, every industry in the world, and specifically here in America, has gotten used to very cheap credit. Yeah. And so that has created asset bubbles. Real estate, probably the largest, right? We are entering a debt spiral. And this is kind of the interesting part of the crypto space, because the new technology frontier really is what most real economists are counting on to outpace the interest growth. So in other words, interest is growing so fast that we have to have something massive like the fourth industrial revolution come along and grow even faster. Otherwise, we're going to enter a debt spiral that is not recoverable from. It's just a mathematical certainty at this point. Yeah. What has happened, Paul, is...
You heard her. You heard what she said. The wall of money is going to come, and you do not want to have liquidated and stepped aside before that wall of money hits. Lock in. Oh my God.
For our listeners who are investors in the space, what would be your advice to them in terms of what they should be watching over for the rest of this year to give them insight and give them the confidence and conviction that they need in their crypto investments?
Yeah, so I have to say this to myself every day too. So this is advice I give myself, Jay, is stay calm, stay patient, right? As we've just discussed, the setup for what is coming is powerful. It's so powerful that if you wait until it's happening, you're going to be chasing returns that you are probably perfectly positioned to get today, right? So just be patient. The other thing I always try and remind myself is, even with all the excitement that has built over the past 18 months with crypto, and the markets being at record highs in many cases, we've only seen the amount of money in the crypto markets increase from 3 to 4 trillion, right? There is $100 trillion of money invested in the broader set of assets that are today not on crypto rails. Again, just think if 10% of that money moves into crypto and token-based investments, we are increasing the size of the crypto markets by 2.5x, right? So be patient, because the wall of money is going to come, and you do not want to have liquidated and stepped aside before that wall of money hits. Be patient, sit back, sit tight, trust that all of these developments are leading to inevitable behavioral outcomes.
You heard the warning. You have heard the warning. Now, I've been hearing a lot of people say, man, I'm going to, real quick. All I'm going to say right now, RIP. 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 Shout out to Mazur. He says, bullish Elon update. A regular trader wallet, not an exchange, has been stacking. Today, it added 200 billion Elon and now holds about 384 billion Elon tokens, worth $38,000 out of 43K. As you see in the second image, he or she swapped all of its PayPay into Elon. Baby. Like what I say. Make it make sense. So while you here, I'm gonna let them talk to you. Family, what do you think? Talk to me. Talk to me. Because you don't want to miss this. Let's run.
Right now, on November 8th, I announced that when Mr. Trump, whether you love him or hate him, this was the beginning of the greatest transformation of wealth the world has ever fucking seen since World War II. See, I know what he was going to do. I knew what and I know what he's going to do now. And he hasn't even got started. Now, what are you going to tell your kids and your grandkids 25 years from now when they say, gee, Daddy, gee, Grandpa, what were you doing other than having your thumb up your big fucking ass during the greatest transformation of wealth in the history of the world? What were you fucking doing? Fuck all, nothing. That's what most of you will tell them, your grandchildren and your children. It's never going to get any better than this, kids. This is the, as I said on YouTube, the eye of the perfect motherfucking storm. This is it. I never thought I'd live to see it again. This is going to make the 80s look like a nursery rhyme, which I praise Allah, praise Buddha, praise God. I participated in slashing and raping everybody in the 80s. Legally. This is going to make that look like a fucking nursery rhyme. And what are you going to tell your kids? Oh, I had to spreadsheet it. I had to think about it. I had to read another book on M&A, you fucking morons. Did I answer your question?
Yeah, pretty much.
Okay.